If you're using the same investment and business strategies you've been using over the past 5 years, let's say, you're risking being left behind. And if you're like many, you don't even realize it yet. Our new reality is that the environment has changed, but most investors have not. The good news is that what I'm seeing right now isn't that the sky is falling, it's not a big panic, but there is a lot of hesitation given the economic uncertainty. That doesn't mean that people are selling everything and running for the exits, although some definitely are, but most are simply stuck and they're sitting on the sidelines waiting and watching and hoping. They're hoping for interest rates to drop or normalize, whatever that means, or for markets to behave the way they did in the past, as if they'll get some kind of bat signal or something that says it's safe again. The assumptions they're making underneath all of that is that clarity comes first. Clarity comes first. That's the assumption. And then action follows. But the reality is that strategy almost never works that way. And in fact, clarity comes from taking small, measured action steps. It doesn't come before it. And here's the reason why. Most people I talk to aren't irrational. They're definitely not intending to be reckless. They're actually not even wrong in how they're thinking, but they are anchored to a version of the world that simply no longer exists. They're living in an old story that I believe has changed forever, even though over the past 10 or 15 years, the rules seemed relatively stable. We have to face it. Back in that time, over the past 10 or 15 years, money's been cheap. Liquidity has been relatively easy and abundant. If you made a mistake, time and inflation usually bailed you out, which was the good news. But now the bad news is that it shaped our behavior because it rewarded leverage and velocity that was based on assumptions that tomorrow was going to be a lot like yesterday. Let me be clear. That environment is gone. It's gone forever. Capital leverage has a meaningful cost again, given interest rates. Liquidity is getting tighter through the uncertainty. Banks are tightening up. And just that change alone is starting to ripple through almost everything. Deals are being priced differently. Risk is feeling more uncertain than ever. And timing matters more because of the speed of which markets are actually shifting from real estate to commodities. Look at gold and silver, for example, or the equity market, new records, new record highs. But the reality is that the set it and forget it strategy is not the same as it's been in the past. The second thing that changed is how risk itself is showing up. Right now, volatility is getting all of the attention. But volatility isn't the real problem. In fact, I like volatility because it's where the opportunity exists. The primary issue is the uncertainty. Generally, when the rules are stable, volatility can be managed. We get in, we get out, we know where it's going. But when the rules are shifting like they are now, our old models of the world stop working. What protected you before may not protect you now. And that's where things start to get uncomfortable for people who've had success doing things the right way, and they've been doing it for a long time. The other thing that's changed is one that most people really underestimate, and that is decision lag. We're really seeing it in the real estate market. People are slower right now, and most are waiting for some kind of consensus, something that says the world's changing back to what it was. They're waiting to see what everybody else is doing. And here's where we really need to pay attention. When large groups hesitate at the same time, gaps open up and cycles don't repeat the way they did in the past. Having said that, behavior does repeat. It's driven by emotion, not data. Over the past 40 years that I've been a business owner and an investor, I've seen this before in different forms. It may not be exactly the same headlines, although sometimes I think it is, but similar economic cycles and human responses continue. So here's what this all means in, practical terms. The biggest risk right now isn't making the wrong move. It's acting like it's still 2019 or waiting for the economic cycle to go back to what it was, making assumptions that the old rules still apply, or that patience and hope is a strategy and is better than doing nothing. But that's just really risky. In fact, doing nothing can be the riskier decision that many don't realize they're making. Most people don't price the cost of doing nothing in environments like this. So clarity actually becomes an advantage and confusion becomes very expensive. The investor who navigate these cycles best aren't trying to predict the future, and they're not pretending to know exactly how this is all going to play out. They're creating a thesis, they're making plans, and then they're going to adjust behavior and decisions to match the environment that actually exists, not the one they hope returns. They're learning, they're simplifying, they're being selective and limiting their margin for error, but they're incrementally taking action in executing on a plan. The harsh reality is we can't forecast every outcome, but the first step is that we need to recognize that the rules have changed. So over the coming weeks, I'm going to break down what matters in this environment and what no longer applies. For those who know me, you know I'm not about the hype or the predictions. I'm about supporting you in gaining the clarity to generate some velocity, looking at the data and the patterns and setting emotion to the side. I'm there to support you in building financial futures for you and your family. I'm going to leave it at that, but please remember to like, share, comment on what you see in the future given our changing world. Let me know what else you'd like to hear about. Thanks for listening.